So there was big news coming out from Fannie Mae last week about an increased limit on conforming loan amounts that will take effect January 1st, 2018. So if you're thinking about buying or selling a property, check out episode 41 now. This is big stuff, and it's going to have some real positive ramifications for buyers and sellers. All right, welcome to episode 41 of Tom's Take, where we're going to talk about the increased conforming loan limit that came out from Fannie Mae last week. The previous conforming loan limit was $424,100. That has since gotten bumped to $453,100. So what that means is that now you can borrow more without getting into a jumbo mortgage amount. So the reason that's so key is that a conventional or a conforming loan, they're all backed by Fannie Mae, so they're going to be much more friendly for the borrower versus a jumbo loan. Sometimes that's what you have to do, but they're not regulated as much. There's going to be some key differences here. So let's talk about how this is going to affect consumers in our market. As a side note here, if you're in other parts of the country, there are some exceptions to this loan amount, so I want you to talk to your local mortgage lender, talk to your agent, make sure you know exactly what you're looking at. This really applies to Pennsylvania, the greater Philadelphia area specifically, as well as the majority of the country. So, what that means, if you're putting 20% down with this new $453,100 loan limit, you just went from originally about $530,000 with a 20% down payment, kept you in conforming loan territory. Now it's $565,000. Big jump. That's a significant jump in pricing, $35,000. So not only can you buy a more expensive home and still have a conforming loan, but there's going to be some other real positives here as well. Let's talk about debt to income ratio and what's typically allowable. On a conventional loan, debt to income ratios can go as high as 50%. I know we talked about this in a few episodes back in Tom's Take that just got raised. So 50% is the highest allowable debt to income ratio. On jumbo loans, it's only 43%. So you can borrow more based on your current income if you can keep it that $453,100 loan limit. Additionally, on conventional loans, you can go as high as 95% on a loan to value ratio. So you can get in with a 5% down payment if you have to. Again, allowing you to buy a more expensive property. Jumbo programs are out there that allow a 95% loan to value, but they are not 30-year fixed rate programs that you will see with a conventional. They're typically an ARM, which is an adjustable rate mortgage. What that means is that after 3, 5, 7 years, whatever rate you locked into, that's going to adjust. And it's going to adjust to the market. So right now, rates are historically low. We've talked about that many times. You have to go to a jumbo program 3, 5, 7 years down the line. You're probably looking at a higher rate based on all the economic indicators, not with a conforming or a conventional loan. So again, this increase in the allowable loan amount here, the limit, is really going to help people. Reserves. So with conventional loans, there typically aren't any reserve requirements, meaning you have to have a certain amount of money in the bank to make the future mortgage payments. With jumbo loans, they require 6 months PITI, so that's principal, interest, taxes, and insurance. That's what composes your whole payment. So let's say you're in a jumbo loan and your payment's $5,000 a month. You have to have another $30,000 in reserves showing at closing in order to get approved. Again, a big deal here. So you're seeing that all these things, the debt to income ratio, loan to value ratio, the reserve requirements, that's going to make it a lot more borrower friendly to go with a conventional loan. And lastly, and this isn't always the case, but typically you're going to see better rates on a conventional or a conforming loan amount versus a jumbo. And the reason for that is all the conforming loans are backed by Fannie Mae, which is the federal national mortgage regulation company that's out there. It's the agency that backs all this. So Fannie Mae backs conventional loans. Jumbo loans are privately held, so that means they're held by the bank. So if they're held by whatever lender you decide to go with, whether it's a big bank, it's a local bank, they still have to hold those. So typically, and again, not always the case, but typically the rate's going to be better on a conventional loan. So this increase from 424,100 to 453,100 in our market allows you to buy a bigger home that's going to have all these positives that have to do with conventional and conforming loans. So I would really encourage you, if you're thinking about buying a home, get in touch with your lender, get in touch with your agent, and understand exactly what these things are going to do to really affect you in a positive way. And if you're selling a home, let's think about our market here. 88.9% of all the homes that sold through the third quarter were less than $650,000. So this affects a lot of those higher end homes. Our average sale price is a hair above $300,000. So that affects a lot of those move up buyers that are moving from maybe a $300,000 or $350,000 home to get into a home that's going to be in the $550,000 range. So this is really great news for our market. I'm very excited for all the people out there that are planning on making a move in 2018 because this is really going to have a positive impact. So if you got questions about this, connect with us on social. Make a comment below in the video. We're here to help. We can put you in touch with a great lender. But more importantly, this is great news for the consumer, and these are my favorite kind of videos to make. I'll catch you next week. Thanks for tuning in to Tom's Take.